Okay, let's start this. What is a trend? Okay, what is a trend? The trend is your friend. So they say. Um, okay, let's start. Let's kick off. Remember in our class we talked about buy and sell, and we said you buy when you want to, when you expect the value of a price to increase. That's it. That's to rise. Okay, so a good place to get seen in this movement up is around here. So you bought around here and price goes above your entry price, your entry point, and it trades up. So the more it goes up, the more money you make, right? And we can remember the sell too. We say you place a sell when you expect price, when you expect a pair, the value of a pair to drop or to fall. So you can see, or you place your sell. It's a good place to get in for yourself, and price begins to fall down, down, down. So the more it falls, the more money you make, right? All right. So let's go. So uptrend. Now, uptrend makes higher highs and higher lows. Now let me explain that. If you look at this thing that looks like DNA, you're a biology student, you it looks like DNA to me though. So you can see price is making a high and then a low, and then a higher high, and then a higher low, higher high, higher low, higher high. What do I mean by that? You see that the last low, the last high is lower than this high. Then this high is also lower than this high. This high is also lower than this high. So this high is higher than this high. That's why we call it a higher high. This high is higher than this high. That's why we call it a higher high. And this high is higher than this high, higher high. Same thing here too. You can see that this low is lower than this low. This low is also lower than this low. So once you see this happen, this is an uptrend. Okay. So when price is making a higher high, price is higher. The uptrend is higher than this. That's the uptrend. This another high again is higher than this. It shows that price is going upward. It's going upward. It's going upward. It's going upward. So for long term, you look for long term buys and short term sales. What I mean here is, if you look at this channel, you see that generally price have been going higher, despite the fact that it's doing zigzag, zigzag, zigzag. Okay, you can see that generally price have been going higher. So now in this kind of situation, you want to look for a long-term buy. Okay, if you bought around here, price is going to come down. Okay, you should not be scared, because you know that you're going for the general move. Okay, you're going for the general high, you're going for the general buy, which is this upward trend, because you can see generally it's going up despite the fact that it is retracing. So this is what I call retracement. This down is a retracement, this down is a retracement, this small down is a retracement, this is a retracement, this is a retracement, this is a retracement, this is a retracement. So all these retracement are the short-term sales. Okay, you can see that price sold here, he 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 sold here. So all this sell we are saying is not still stopping the general move up. Okay, you can see it's not stopping. Generally it's still moving higher, although it's making short-term sales, which we call retracement. Short-term sales. So generally you want to buy for the long term and you want to sell for just a while. Okay, so this is an uptrend. So let's go see how it is in the real chart. Okay, okay, look at this. You can see that from here price was making a higher high, higher low, higher high. This high is higher than this high. Okay, this one, higher high, higher low, higher high is higher than this high. That's why we call it higher high. Then higher low, then another higher high again, then it came down, higher low. Okay, let me use this so it's so that we can, is white okay? Let me use we must understand this. It's very, very important. Hold on. Okay, you can see that. You see, okay. I'm still here with you. I'm here with you. I'm just trying to draw this out so we can see how it has been going. Okay. This is the next eye again. And then it came down around here, and then went high to this place, and then here again, and then another higher high, higher than this previous high. You can see that. Okay, you can see that, and then downwards again, and another higher high. You can see, and a lower low, higher low here, and another higher high. Before we now have a change in direction. So let me highlight this now. Let me highlight this. Let me just draw this. Let's use color. Um, let's use color yellow. Okay, let's zoom in. All right, all right. Okay, good. Now you can see the price here. It made a high higher than this high. And when it came down, it didn't take out this low here. We should look at our presentation too. The same thing. Uh, Look at that. Look at that. Look at this higher low. It's not lower than this low. This higher low too is not lower than this low. So also the higher high is higher than this high. This high is higher than this high. So it's the same thing we are seeing on the chart now. You can see this high is higher than this high. This low is lower than this low. The next high is higher than this high. This low is lower than this low. The next high again is higher than this high. This low is lower than this low. This high is higher than this high. This low is lower than this low. Then this high again is higher than this high. This low is lower than this low. Then this high. Then before we now have to change the market structure. I'm going to teach you how to get that. That's breaker block. Okay. So you agree with me that this is an uptrend. But you can see that small retracements. There are small cells. Market does not just go up because you want to buy. It's going to make retracement. That's how the market is. It makes like here, goes up, retrace, 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 go up, retrace, and here retrace, blah blah. That's how the market works. So those small retracements are the short-term cells. Generally, it's going up. Price is going higher. How do we know that? Because it's making higher highs and higher lows. Okay, that's why we can say this is an uptrend. So that's how to find an uptrend. Let's move on. Okay, so downtrend. We look for long term. Okay, makes look here, low trend makes lower highs and lower lows. Now look at that. You can see this lower high is lower than this high. This lower high is lower than this high. This lower high is lower than this high. Okay, that's a downtrend. This lower low is higher than this low. This low is higher than this low. This low is higher than this low. So that's a lower low. It's going lower low, and then this is a lower high. Lower low, lower high. So when price is making a lower low, lower high, let's start from here. Lower low, lower high, lower low, lower high, lower low, lower high. Don't mind me, I played too much. So lower low, lower high, that's a downtrend. So you look for long-term sales in a trend like this and a short-term buy. What do I mean? Generally, you can see price is going downwards. Agree? Okay? You can see price is going downwards, and then you can see price is retracing for a buy. This is a short-term buy. It's going up here. You can see it's going up. Yeah, and then it's falling down again, sell. It's going up small, and then fall down again, sell. So let's go and see how it is on the charts in the real markets. Okay, okay. We have this. This is a change in market structure. Yeah. Mm, let's just do this. Okay, and then the boom, and then and this, and this, and this, and this. So just making small movements, and then we add this. Okay, some of you may have a question and say, why didn't I draw it to this place and then this place? This is also a lower, no, it's not. You can see that the um, lower low didn't take out this low. Okay, you can see this low didn't take out this low, so that's not a lower low. It's still in the same range until this low is taken out. This low is taken out before we can say that's a lower low. And you can see this guy, he took out this low. You can see this low took out this low. You can see this low took out this low. You can see this low took out this low. Okay, okay. So the next one will be where? Where are you saying? Yeah, are you saying yeah? No. Why? Because it's not taking out this low. So where will you look at? Yeah, confirm. You don't sabi work. Clap for yourself. So the next one, this small retracement here, and then this one here, um, and then this small one, and then this one. Okay, no, I'll just use this, and this one here, and the last but not the least on my chart right now, this one. Okay, so let's mark this out so that we can all see how beautiful it looks. How beautiful it looks. How beautiful it looks. Oh, how beautiful it looks. Okay. Uh, let's make this what color, guys? What color? Let's go red. It's red gonna be fine. Not bad. Let's take it again and then we put it on there. Just show you the channel. Okay. All right. We can see the price is making a lower low, lower high, lower low here. This guy is taking out this guy. Lower high, lower low, and a lower high. This guy almost took out this guy, but it's in the same length, so we can still call it lower high. Okay. Then this one came down, lower low, lower high, lower low, lower than this, higher, lower high, lower low, lower high, lower low, lower high. So this is a downward trend. Generally, it's going down, but there are short-term buys. So these buys are what we call the retracement. Okay, it's a retracement, a retracement. Small, all these buys you're seeing are retracements. This buy is a retracement, but generally it's going down, 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 down. Okay, let's go on. So we have three trend types. That's the uptrend, the downtrend, and the last one, which we call the ranging market, consolidation, or we call it indecision or choppy market. So you see this guy get like four names. So we call it ranging market once again, consolidation, indecision, and choppy. So if you look at this, Um, look at this my picture here. You can see price is not making, it makes no higher high or lower lows. Okay, it's just sideways movement. So that's indecision or choppy market. Market is just moving sideways. So let's go to the chart and see how it looks. Okay, okay, we have this one here. Also have this one here. Okay, you can see here. I saying price is not making a higher high, rather it's just going sideways, 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 not making a higher high until here it busts this place. So I'll teach you how to trade this. We have a setup called a turtle soup. That's how you're going to know. We're going to teach you how to trade ranging market with a turtle soup model. Yeah, you right me. You heard me right. Turtle soup, soup. Okay. Look at another one here. Okay, it's not making a high, rather it's just like an M, like a giant M. So that's a consolidation market. Okay, so you get me here. Look at that. This and this and this one too. This here and here and here. So it's not making a higher high, it's not making a lower low, it's not making a lower high, it's not making a higher low. It's just sideways. So that's a choppy market. Okay, so that's the end of the trend. I hope you understand this. Watch the video multiple times, you will get it. So let's go to the next class. Um, this is the Japanese candlestick. Japanese candlesticks. Okay, so now let's reason this. I go into the market, I buy. Chidima sells, Wheezy buys, Icon sells, Mr. Maker buys, and somebody else is selling also. Now, the market will not just put on it, will not just put our name and say, okay, Jibola bought here, Creed bought here, Wheezy bought here, Chidima bought here. No, it's not going to do that. What the market is going to do is it's going to represent our orders, our buys and sell in what we call a candlestick. There are other ways you can represent our buys and sell. There's the Japanese candlestick, there's a line chart, and there's a bar chart. But um, Japanese candlesticks is the best way to interpret markets. Okay, it's the best way to interpret what the market is doing and the amount of buys and sells that is in that market. Okay, so that's why we all use, most traders use Japanese candlesticks to trade. I'm going to show you what this is. So Japanese candlesticks is basically the representation of your buys and sells on the chart, okay, or in the market. So this is a candlestick. This is a Japanese candlestick. The Japanese candlestick. Okay, so you can see this big thing you are seeing here, or this rectangle. Is this a rectangle? Hey, I below there. Okay. Whatever it is, this thing you're seeing here is what we call the body, the fat portion. That's the fat portion. It's called the body of the candle, body of the candlestick. Why the wick, which is also called the shadow, is this guy, this thin guy. Okay, this thing will be like one like this. That's the wick, and this is the body. Okay, so wick, wick, body, wick. Okay, wick, body, wick. So the open, high, low, close. Now, this is going to be tricky because you're just learning. Don't worry, submit yourself to time and process. You will understand it. And trust me, you will come back to this video when we get to the advanced class because you're going to get some insight. Why? Because you're growing, okay? You're going to grow and you will have to come back to revise on this topic because it's very, very important, okay? But just pay close attention to what I'm about to tell you. So the open, high, low, close is what the Japanese stick is all about. Okay, that's why we have wicks and we have bodies and we have wick. So now this place says open. when this candlestick was forming, when it was forming, when this candlestick was forming, it opened just around here. It opened here. Then it bought. It went higher. Remember when we buy, price will go higher. So it bought, it went higher. Then sellers sold. Come on. Then sellers entered that buy candle. Okay. Sellers pushed the buyers down. Sellers pushed the buyers down. That's why we have a wick. Okay. This wick you're seeing here was a buy candle before. It was going up before it now came down. So when sellers entered into this candlestick, people were buying, others were selling. So when you see a wick like this, what it means is that above of the body, what it means is that it went up before. Okay, buyers were buying it, but the amount of sellers were too much, so they pushed the buy candle down. So that's why it will wick. Okay, the pressure will push. It's just like a pump. When you press a pump down, it goes down. Yeah. So it was buying before. Where's my cursor? Cursor, come on, stop. Okay. So it was buying before, and then seller's pressure pushed it down. That's why it is going to weak. Okay, so sellers pushed it. It was going down, 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 down. Then it came, went low to this place, and then buyers came again. They bought this same candle, and then what do you think is going to happen? It's going to go up, right? So this week they are seeing here is buyers pressure. Buyers came into this candlestick. That's why it wicked like this. If buyers didn't come at all, the candle is going to be here like this close is going to be just here, but buyers came in and then they pushed it up, so that's why it wicked. So when buyers pushed it up, the candle closed around there, and that was the candle formation for this particular candle. Okay, so this candle can represent 1 second. It can is that 1 second? I think so. Trading view gives 1 second, 2 seconds. This candle can represent 2 seconds. It can represent 5 seconds. It can represent 1 minute. It can represent 2 minutes. It can represent 5 minutes. It can represent 15 minutes, 30 minutes, 1 hour, 2 hours, 3 hours, 4 hours. Um, it can represent weekly, it can represent a day, it can represent a month. I think the month is the highest. Okay, don't worry, we'll get to it. I'll show you all these things I'm talking about. So weeks indicates that the candle is weak or not healthy. So if you should look at candle A and candle B, this week that came into this candle A shows that this candle A is not healthy. What do I mean by healthy? It is not strong enough. It was buying before, it bought to this place, but seller's pressure pushed it down. Remember, when you sell, the value of the price of that currency pair falls. So sellers pushed that buyers, they pushed the pressure of the sellers were too much. There were too many sellers than the buyers, and then it wicked down to this place. Okay, the same thing happened here. This market sold to this place, but buyers push it up. That's why, and it closed here. But this one is very healthy. What do I mean? It went up. There are not too much sellers, just little sellers, and here just little buyers. Okay, we are running out of time. Okay, and here just little sellers and just little buyers. So this is an healthy candle. This candle is not healthy. So it also indicates where liquidity is. Remember, I told you liquidity is where the money is. So this is liquidity here. There is money here. We'll get to it because there are people stop loss here. So that's why we call it liquidity, because there is money here. Many people will enter this sale from this place. Okay, so a lot of money is here because they enter the sale here. A lot of money is here because they enter the buyer. So this is liquidity. This is the liquidity people bought here. That's where the money is. Go to your I think part 2 of this Forex basic. I talked about liquidity. There's a liquidity here too also. So weeks are signs of buyers and seller pressures. We talked about that already. Okay, so let's go to the real chart. Let's go to the real chart. So what I want you to get is that uh, okay, so the green candles are what I call the buy candles. In your chart, it could represent anything. You can use black, you can use yellow, you can use pink, whatever color it is. But when you see markets closing up like this, it's a buy candle. Okay, it's a buy candle. But we just use color to just for easy representation and for you to see it quickly. Okay, so this is sell candle. The red candles are sell candles, while the green candles are buy candles. So I was talking about, look at this space. Look at this space. So I was talking about a candle can represent 1 minute, can represent 2 minutes, 3 minutes, blah blah blah. So this is, if I click on this 1 minute now, what it's telling me is that each candle that you're seeing here, each candle, this is 1 minute. This candle formed in 1 minute. Okay, this candle formed in 1 minute. Let me see how. Okay, look here. Look at the at this place. This place. Can you see the numbers are changing? 11:59, 12. The next candle, 12:01. Can you see that? That's this green candle. Look up and look down. Okay. Look at the next one, 12:02. Can you see that's 1 minute? Okay. Another one, 12:03. That's 1 minute. So you agree with me that this candle is a 1 minute candle. Okay. And we can also go to the M5. You will see that every candle represents 5 minutes. Look at this down again. Look at this. That's 15:05. If you move it, that's 15:10. Look at this down. If you're not seeing it, look at this place where my cursor is right now. If you move it again, that's 15:15. That's the next candle. The next candle, let's move it again. See, that's 15:20. So the same thing for 15 minutes, the same thing for 1 hour. Okay, let's go to 1 hour. Look at that. That's 11:00. If you move it, that'll be 12:00. The next one will be one. That's 13, right? That's 1 o'clock. And next one is 2 o'clock. That's 14, and then 15, on and on like that. Now you can, this is H4. That's 4 hours. Next one, daily candle. That's one candle represents 1 day. Look at this. Look at the date. Look at the date. That's 2020 0720. The next one will be 21. Look at that. 2020 0721. Next one will be 22. 2020 0722. On and on like that. That's how it is. Okay. The next one will be weekly time frame. You can see that if you move to the next candle, 16, move to the next candle, 23, and then we have the monthly time frame. That's one candle represents 1 month. Okay, look at this. So it means for the whole month of this candle, which is 2015 of April, 1st of April 2015, you can see this whole month was a buy. The whole month bought. And then let's move to the next month. That's May 5, 2015, 501. It was a sell. Okay, so that's how we roll. We that's how your candlesticks are. Okay, so I talked about line chart and bar chart. So this is a line chart. You can see that that's just line. It will be hard for you to represent to understand this more or to analyze it, so we don't use it. And this is the bar chart. Okay, so we use the candlestick, Japanese candlestick. Look at that. It's better off than the rest. So I think. Okay, so that's it. Think. What else? Only if you have questions. Okay, you can see this H1 time frame. You can see how big the candle is. If I go to H4, sorry, I don't use this harmonic pattern. You can see if you go to H4, it reduces. Why? Because one candle in H4, it means you need 4 hours to make one candle. Okay, 4 hours will make 1 hour candle. 4 times is what's going to make one candle here. So you go to daily, you can see that this our trend reduces in size. You can see it reduces is reduced in size. You can see they are all green candles, they're all bought on the daily time frame. So it means on a daily you have 24-hour candle, like this 1 hour here, you have 24 of it in one candle. Okay, in one candle you have 24 of it. Abi, 24 hours make one candle, right? So you have another 24 on this one, you have 24 in this one, you have 24 here, you have 24 here, you have 24 here, you have 24 here, you have 24 here. You go to the weekly, you can see it's getting smaller and smaller. Where is it? Look at that. We cannot even see very well again. You can't see very well again. So that's how this works. Mm. Mhm. Okay. Okay, so if you have any questions, sorry about that. If you have any question, let's discuss. So unmute your mic. Let's talk. Any question? Unmute your mic. Let's talk. Any question? We have,
I have a
we have
question.
okay. We have just 3 minutes for this meeting to end. So ask your question quickly. All right, go on.
Okay, my question is when you're talking about the candle week, I
Yes.
said that's where the pressure comes during the candle week.
Yes.
So I want to really know, like, how do we determine which pressure is coming in? Like, probably we place a buy position or a sell position. How do we determine which pressure is coming in? Will it, from the candle week, will you determine the color of the? Will you know which, if it's a bearish candle or a bullish candle?
All right, that's going to be in the technical analysis. You do not need to bother about the pressure
Okay.
of the candlestick or no pressure.
Okay.
It's just for I'm just explaining because you need the knowledge. Okay, so when we get to the advanced
Okay.
class,
Okay.
when we get to the advanced class, you will see that you do not even have to bother about the pressure or not.
About
Okay,
it.
yeah, you do not have to
Okay,
bother.
sir.
Yeah,
All right, sir. Thank you.
yeah, you're welcome. Anybody else? Anybody else? Anybody? 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 Okay, if I don't get question in the next 10 seconds, I'm going to end this class. And that'll be all for today until Friday, same time, 6, 7, 8, 9, and 10. All right, people. I love you all. Have a great night. So I'll send this to the channel. So thank you very much. Bye for now.
Thank you.
Bye.
Yeah, thank you. Bye.